Hey guys, Matt here. In this week's portfolio update, I want to talk about FedEx kick-ass earnings and what they mean for the stock going forward. So I released a video in January about FedEx, which you can watch here, in which I go over the stock in more detail and why I'm so bullish on it. I basically think FedEx is going to easily be a 2x or 3x stock in about 3 to 5 years. But the thing is that FedEx is not a company that's not gonna, get a lot of news. Your favorite YouTuber isn't gonna talk about FedEx all the time. It's not going to dominate, Yahoo Finance headlines. All it does is sit back, relax, and perform a service that the modern world can't live without. See, the good thing about FedEx is that I don't have to tell you who they are or what they do. You already know. You already know their entire business model. They do one simple thing. Well, it's probably not that simple once you get down into it, but they do one simple thing. Well, two simple things. They transport and deliver shit through a multitude of means. So let's look at their latest 10Q. Over a 3 month basis, year over year, they went from $17.4 billion to $21.5 billion. That is fantastic. And on a 9 month basis, $51.8 billion to $61.3 billion. This is a company that has benefited greatly during the pandemic. I mean, since the pandemic, as everyone in the world is aware, going and doing places in person is a bit harder. And as a result, businesses and people, they rely more on delivery service such as FedEx to do a lot of the heavy lifting, which FedEx has been stepping up like a champ. And not to mention, FedEx has been selected, at least in North America, as the company to distribute all these coronavirus vaccines. So if you thought the revenue was great, I want you to take a look at their bottom line, their net income. They went from $315 billion to $892 billion on a 3 month basis. And on a 6 month basis, $1.6 billion to $3.3 billion. They've doubled their bottom line. Looking at their balance sheets, their assets increased since May the 1st, 2020 from $73.5 billion to $82.7 billion. Quite an upswing of assets. Liabilities, they went up in liabilities, but not nearly as much proportionally. Now, their debt has gone up, which is something we're going to have to watch out for. It's not terrible by any means so far, but it is something to keep an eye on. Now, I want you to look at this cash flow. Cash provided by operating activities. This is the cash that the business creates. They went, since last year, on a 9 month basis, from $3.2 billion to $7.3 billion. Their cash flow is fucking amazing. So FedEx is a company that operates in many, many different countries worldwide. So it's not difficult to see how they could continue to grow exponentially. Now, I'm not going to read all of this, but I think back in 2016, I think that's when it happened, FedEx acquired a company called TNT Express. And the reason for that is because, FedEx wants to grow into Europe. They're expected to complete the final phase of integration in 2022. And then after that point, we will see whether this acquisition was a good idea or not. The point I'm trying to make is that they are aggressively trying to grow into the European market some more. Just at the end of last year, they acquired a company called ShopRunner, which is FedEx is trying to get into the e-commerce platform some more. They believe that ShopRunner could be their foothold into doing so. Now, I want to show you some valuations based off of the earnings. So I'm actually recording this during the day on Wednesday. You'll be seeing us on Friday. I'm technically on vacation, but I have to get a video out anyway. But anyways, as of right now, FedEx is trading at roughly $273. Take a look at these statistics. As of right now, the recording of this video, FedEx has a 4 PE of 13.87 and a PEG of 0.81. With a PEG, it is optimal to get below 1. So the fact that this is below that means that this is still trading at a pretty attractive price from a PE perspective and a PEG perspective. Hell, price to sales below 1, which is optimal. These are numbers that I just can't ignore. This may look like a expensive stock, but based on its earnings potential and its growth, this is a fantastic price to buy the stock at. Now, in my video I did on January, I gave a very conservative go-in price at $278, but that was when the EPS of 2022, according to analysts, was 18.77. Now, since then, that has gone up almost a full point. So, whatever price target this is, I haven't done the calculations on it yet because I'm already invested in the position. I mean, that's a lot higher now. Speaking of analyst estimates, I mean, if you believe them, they're expected to go from a 9.5 year-ago EPS to 17.78. That's the average consensus between 24 analysts at the end of fiscal year 2021. And I am almost positive that FedEx is going to crush it. Absolutely going to crush it. And they're also expected to, after this year, next year, 29, almost 30% growth every year for the next 5 years. Assuming FedEx lives up to these expectations, yeah, this is easily a 2x or 3x stock over the next 5 years. Easily. Now, one thing I like to look at, now I know analyst estimates aren't gospel, but it's a kind of a hit of confidence, right? Because, I mean, if enough people, in the stock market, if enough people believe a thing is going to happen, that makes the thing happen. So one thing I like to see is the EPS trend. And the fact that these are going up on a general scale, that's a fantastic thing. Especially on the scale that it is. And let's wrap things up by looking at my portfolio. So this is during the day. And my tech stocks are getting absolutely hammered. What's the NASDAQ doing today? Yeah, it's getting absolutely crushed. But, just like every other day for the past month and a half maybe, yeah, everything's getting crushed. Cloudera, it's like a hang glider. I mean, I think a month ago it was like $18, and it's hang gliding all the way back into the $11 range. Fantastic. We got Hyliion looking very pretty at a 17.4% loss. Now, the thing with Hyliion is I don't expect anything positive to happen with the stock for the rest of this year. I mean, and this Hyliion surprises us. The next important thing that's supposed to happen is at the end of the year when the demo fleet of the Hypertruck ERX rolls on the line for potential customers to look at. So as long as Hyliion doesn't fuck it up, it's at that point when we should start seeing some upward movement. But until then, unless we get surprised, I mean, it's just going to keep being like this. Now, fortunately with Hyliion, I mean, Hyliion is a spec stock, and I've already spent the amount that I want on it. So despite it being down this much, I'm not going to buy any more. My position is built. Now is the time to sit and wait. But despite the gradual loss of all my tech stocks, I mean, things are still looking pretty good. I still have a 35.3% gain. Total equity of $45,317.96. So, I mean, I'm not doing horrible. And it's really annoying that the prices are dropping, but not dropping enough for me to actually buy some. Now, I might actually, this is during the day. I might actually buy some ARK. It's a really good price. I might buy some right now. And done. Yeah, I bought some more ARK. One thing that's really annoying, and I guess it's a good problem to have, is that AT&T. So whenever crashes happen, it just seems like AT&T, the one stock I want to buy, to get some dividends and stuff, the one stock I want to buy always shoots up. All the time. I guess it's a good problem to have, but I don't know. It's a little annoying sometimes. But anyways, take care, have a great day, and eat your vegetables.